So Ty, as a legacy corporate treasury practitioner, and myself as a legacy banking treasury management provider, bring very interesting perspectives from the industry into the global treasury and payment space.
I'm often asked to define what is cash management. Cash can be a lot of things in a company. It can be petty cash in a drawer. It could be debt instruments, capital markets transactions. Cash management is the sum of managing all forms of liquidity. Now, if you ordered a pizza in London, as an example, and you needed to pay for it, you couldn't access a petty cash drawer in Delhi. You'd have to come up with some method to move that cash from Delhi to London. And it's really not about ordering pizza or paying for pizza. It's about managing global cash currencies, global cash liabilities, foreign exchange, bank relationships, asset liabilities. The list goes on. Corporate treasurers in the cash management field have a lot of things to juggle, and is no simple definition for cash management. It is, as most directly, paying the bills in whatever format it takes to get there.
So cash management has actually evolved over the years into what is now coined as treasury management, mainly because of the huge complexity in managing the entire environment around everything that Ty described. Banks have to do it for themselves, and banks have to be able to provide those services to corporates as well. When you add in the data, the remittance, the timings, as well as the inflows and outflows of cash, it's really moved up to debt management, capital markets, and of course the all-important regulatory reporting. So what used to be called cash management, and at times still is, really has evolved into a world of treasury management.
Are corporate treasuries really different from bank treasuries? Well, every bank is a corporation. And if you're speaking about how a bank meets its liabilities and how a corporation meets their liabilities, they are not that dissimilar. There are differences in their perspective and point of view. Banks provide services to corporations to help them fund their day-to-day operations. Corporations, on the other hand, have resources outside of banks that can be utilized. Now, from their viewpoint, they are not dissimilar in that they have the same goal: efficient cash management, low-cost funding, reducing risk into the balance sheet. All the same targets and objectives exist, but the manner in which they approach them are completely different.
As a banking practitioner, what I've seen is that the bank plays two roles. Again, the bank itself is a corporate that must use the products it actually sells to its customers. It must manage its position. It must manage itself at the money desk level. Banks are unique because the money that it has isn't all its. The money in a bank belongs to the customers. And so not only do the positions need to be managed for the bank's general ledger and banking accounts, but the bank must also be managing the money that it brings in on behalf of the corporate. And of course, as a financial institution, is regulated completely differently than many of the corporates are. Add on to that, in the world of corporate treasuries, they have the same roles, but in the corporate world, you actually get into different businesses, varying industries and verticals. So a healthcare provider or an insurance provider has a different set of rules and regulations to play with versus a retailer versus someone in telecom versus someone in petroleum. So a bank is in a unique position to not only supply itself with products and services that it must use, it needs to be equipped to help all of its corporates, no matter what their size, where they are in the world, and what industry they may be in. We've been really fortunate to have an elected position within the Payments Innovation Alliance, a member organization in NACHA, which is the Electronic Payments Organization. It's an industry influencer made up of nothing but financial institutions, services and products providers, as well as corporates. And so it's a place where we can come together to try and address the issues that we are all facing. Everyone's trying to solve the issues for themselves as companies, as well as for their customers. And so it's really an opportunity and a privilege to serve representing our company and being able to influence what is going on in the pain points. The ACH is a specific payment network, but all of our payments use the ACH rails in many, many ways. Debit card transactions settle through ACH, checks settle through ACH, bulk payments can settle through ACH. So ACH is a rail, but it really is a payment mechanism that allows data and dollars to move. And so it's always looking forward 5, 10 years to what we need to be able to do to service both consumers, corporates of every size, small, medium, and large, and different countries, all who have different geo-rules, cultures, and philosophies. So it's a real opportunity to not only be an active participant in what's going on, but the ability to influence what companies need, banks and corporates, going forward.